Welcome back. Microsoft stock is down over 20% from its all-time high, and many investors are now wondering if it has bottomed. In this video, I'm going to try to answer that question. I'll provide you with two different valuation models, and I'll ultimately tell you where I'm looking to start buying the stock with the idea of averaging down. I'll also bring in technical analysis and try to augment the fundamental analysis that I'm going to give you. So I hope you find this video helpful and informative. Before we get into the valuation models, I do just want to review quickly some of the narrative in the market for why the stock is down so much. First of all, Microsoft is spending a lot of money on capital expenditures for their artificial intelligence build out. This is similar to like what Amazon is doing, and Amazon stock is also down for similar reasons because this build out of artificial intelligence is obviously costing these companies a lot of money, and it's starting to bring in questions about when the return on invested capital is going to be here and how it's going to affect the business models for these companies long term, if they will become more capital intensive, what's the depreciation on these assets going to be. All these types of things are questions that investors are asking. They're also seeing some margin compression in their cloud business. So cloud growth margins are down a bit, and they've guided to have them go closer to 65% in the next quarter. And this is also a part of the process of investors questioning this future return on invested capital. Microsoft in particular has a particular risk for uh, a lot of concentration with OpenAI commitments, and OpenAI is not a profitable business yet. And so, even though OpenAI is one of the biggest names in AI right now, and there's a lot of support from other big companies, among the Magnificent Seven, OpenAI still not profitable. There are some questions about whether or not they'll be able to meet their future obligations. Microsoft's also seen some friction in Copilot adoption and Azure deceleration. Copilot is not really the best product from what everybody's kind of saying, and so that has also been a bit of a negative on the stock and their cloud growth. In their Azure cloud growth, it's still strong. It was 39%, but they're guiding for a slight deceleration in this. So whenever you see decelerating growth in something that has previously provided very strong growth, it can lead the market to start to question the multiple. Microsoft has also been lumped in with some other software stocks like Adobe, ServiceNow, Salesforce, that the market is afraid that these names are going to get disrupted by AI. And so even though Microsoft might have a wider moat than some of the other software names, and might not be as strictly a software business as some of those other names, part of the narrative in this sell-off has also been that Microsoft has been included in with those software names. And so there's a lot of things that have been working against Microsoft stock in the first half or the first quarter of 2026, and also much of the second half of 2025. And so for that reason, the stock is down quite a bit. And as we said, a lot of people are starting to question, is now the time to buy Microsoft? So if we look at a couple valuation models, here is a discounted free cash flow model. I modeled in 16.34% growth in 2026, 14.71% in 27, 13.8% in the following year, 2028, 12.1% the year after that. And we're tapering this down to 7% revenue growth by fiscal year 2035. We're looking at almost 38% net income margin for fiscal year 2026. But then I had that decrease some as some of the depreciation from their Capex investment starts to hit the earnings in the following couple of years. I do think they'll see some efficiencies from AI, which will allow them to bring this back up to around 37%. I didn't want to get more aggressive than that with the net income margin though, so I thought 37% was pretty fair for a long-term margin for them. Again, seeing some combination of efficiencies from AI, and at the same time having some pressure from having to invest more in capital expenditures into the future. And if AI is as big of a part of the business as it might become, I don't think that we can say this is going to be a one-time thing that they're going to have to build out this AI infrastructure. This may be an ongoing thing, which might change how much capital is required to continue the business and continue growing the business. So I don't think that we should just say, oh, it'd be a couple of years of an AI build out and then it's going to be all done. In terms of stock-based compensation adjusted free cash flow, I have a couple of years modeled in here where they're going to be hit from the build out. But then I said, what if they can get this back to 80% stock-based comp adjusted free cash flow to net income, which I actually think is kind of a little bit generous even here, because even back to 2022, you can see this was under 80%. But let's be a little bit optimistic because it is Microsoft. Let's say this AI build out works, and let's say that maybe they're able to, um, maybe they don't do quite as much stock-based compensation as the company continues to mature. So maybe that's a part of it. And maybe they just become more of an efficient, mature business as it's not a new company, but as time goes by, maybe they're able to get that number up to 80%. 3.5% perpetual growth rate. I calculated a weighted average cost of capital of 10.5%, and I get a fair value of equity of $285.43. Microsoft closed today. We can adjust this. Microsoft closed today at $405.76, it looks like. As long as my trading view tab is not giving me an after hours price, but I don't think it is. So a lot of people might look at this and they might say, Microsoft is not going to $285.43 per share. And I kind of think those people might be right. So I'm not necessarily going to wait for the stock to get all the way down to that $285-ish area before I start buying this, because I do think that would represent a lot more downside for Microsoft from here. I also looked at this another way. If we look at it from an earnings multiple perspective out into the future, if we have these revenue growth rates and then we have this net income margin of 37% in fiscal year 2030, I factored in some share reduction. Microsoft hasn't really been doing a lot of buybacks at all in recent years, as you can see, but let's say they, again, as they build this out more and mature a little bit more in the AI space, maybe they start to do more buybacks. And then I have dividends per share and also factored in some dividend growth. And I tried to look at between now and the end of fiscal year 2030, if you want to get about a 15% CAGR, what would your buy target be if you think the stock is going to trade at different multiples? So let's say if the stock trades at a 20 trailing PE after fiscal year 2030, here would be your total proceeds, including dividends and the EPS. And then this would be your buy target if you want that CAGR. So let's say it trades between a 22.5 and a 25. Let's say Microsoft's not going to trade at a 30 PE forever. Let's say as it matures more, continues to mature more, and maybe if that growth decelerates, maybe it does have a lower multiple and trades between 20 and 25 times earnings. I mean, if you were to want to get that about 15% CAGR between now and the end of fiscal year 2030 or after fiscal year 2030, you're looking at a buy target, I think, of about $350. So $350 is about where I might look to start buying the stock if it goes there, because then if it trades just a little bit under 25 times trailing earnings after fiscal year 2030, I think I'm still going to be in a pretty good spot to try to double my money within that time period, or not double my money, but get that 15% CAGR, because this wouldn't be a full 5 years out. So I'm looking at this around 350. If we look at this on a chart, okay, we can see about where my target would be, and it kind of lines up with these prior highs from 2023 and then 2021. You also see here it was trying to, right now it's trying to use that 200-week moving average as support here. We'll see if this can trade up from here like a lot of people think. I'm not as convinced that this is not going to reject off some other moving averages and then go to this could try to take on this 50-day right here and then roll over to the downside and hit that about 350 target I'm talking about as an initial buy. The overall market ends up in more of a down year or something like that, and it tries to find some support here, but just kind of continues to trend down, and perhaps we could see it rotate to that 285 area. So I basically would be looking to dollar cost average the stock between 350 and that 285 area, and then see how it goes from there. Obviously, if it starts to really sell off to that extent, I wouldn't be opposed to continuing to dollar cost average such a strong company like Microsoft. So that's kind of my thoughts on Microsoft right now. A lot of investors seem to think that this represents a spot where Microsoft's just going to turn it around, and I'm not so much in that camp. I think that we could see this stock rotate more to the downside. I think anytime people see a quality company like this sell off to the extent that it has, and they start saying, "Oh, it's trading at this lower multiple," they assume that it's going to go back to the higher multiple again in the future, or that the market is gonna price in more growth again in the future. But that's not always necessarily the case. I think that there is a lot of room for growth in artificial intelligence and other things that Microsoft is doing, and obviously the cloud growth. And I think that the business is going to continue to grow a lot. But if the business becomes more capital intensive than it has in the past, maybe the market starts to say maybe Microsoft deserves to trade at a 20 to 25 PE instead of a 30, 35 PE. Not to mention the fact that the overall market right now is kind of expensive. Another thing I'll mention with Microsoft is I think a lot of people think, oh, it can't go to 285. The stock's not going to go that low. And I'll just remind people that a lot of times stocks can go lower than you think. I remember I made my Adobe video and I looked at it, and even I was questioning this fair value that I got in my sort of base case model of 263.81. And the stock ended up going lower than that. And I still haven't bought it because I'm still not really sure if it's not going to give more of a margin of safety than even that. And I think there were people that when it was in the low 300s thought that Adobe had bottomed out. So stocks can go lower than you think. Just because it's Microsoft, that doesn't mean it can't trade lower. Remember when Google was trading under 20 times earnings? It's definitely possible, especially if the market starts to price in a more capital intensive business model. So I would not say, that it can't happen. Quality business. I might start buying it around 350 or I might not. I'm still thinking about it. But I think between 350 and 285, I might dollar cost average some if it does get to those levels. And if it doesn't, maybe I miss out. That's okay too. There'll be something else that I can buy. I hope you found that helpful or informative. If you did, please click the like button, subscribe, click the bell to get notifications, and follow me on X at Stock Sale Flyer so that you can get more of my updates about what's going on in the market and things that I'm doing. Really appreciate it. Thanks, guys. Bye.